A slightly bearish thought going into earnings. Starting thoughts. I still hold to thinking Palantir will have revenues of around $364 million based on my old due diligences, as well as my new thoughts on Palantir's revenue stream. But if they break that, we could still see something that doesn't help us. Let me break it down. Revenue. At this point, I am mildly concerned that contracts acquired in the quarter do little or no actual revenue for Palantir if they have a decent length of time on the contract. Why? In Thiel's book 0 to 1, Thiel states Palantir is on track to book sales of $1 billion in 2014. There is also appears to have been an article stating Palantir booked deals totaling $1.7 billion in 2015 by TechCrunch. So let's take a look at that really fast. They reported from TechCrunch Palantir expected for more than $1 billion in contracts in 2014, and from this report from Bloomberg that Palantir had booked deals totaling $1.7 billion in 2015. So, getting into the contracts. I am now under the belief that they were basing it off of the total remaining deal value and or deal value and IDIQ awards. Quote, we ended quarter 1 2021 with $2.8 billion in total remaining deal value, according to page 30 in their quarter 1 2021 presentation. And they also have, quote, $5.4 billion in total remaining deal value in IDIQ awards as of the end of quarter 1 2020 on page 20. So let's take a quick look at those. So here we have page 30 of their business update, their web report. And it says ended quarter 2021 with $2.8 billion in total remaining deal value, up 40% over the year, as well as this 3.7 years average contract duration. Very, very important to remember that. Let's also take a quick look at page 20. Here you can see in quarter 2021 alone, they state we hired nearly 50 new salespeople, as well as the $5.4 billion in total remaining deal value plus IDIQ awards as of the end of 2021. We know the actual revenue for Palantir in 2018 and 2019 as $595 million and $742 million as stated in their SEC filing on page 2. And I also think that 481.2 is their unrealized revenue from 2017 if I'm reading it right. So the disparity between what they are now reporting as revenue and what they are talking about leads to the changes in revenue streams that they made with contracts. So let's look at the SEC filing here for a second. Okay, here we are with page 2, and you can see it's exactly as I said. We generated $742.6 million in revenue in 2019, and reflecting an increase of 25% from our revenue in 2018, which was $595.4 million. In the first half of that year alone, during a period of significant geopolitical instability and economic contraction, we generated $481.2 million in revenue, reflecting a growth rate of 49% over the same year. So I'm pretty sure that means this is what 2017's revenue was. So cool fact right there. So this change could mean any number of things, but I'm going with this. Palantir doesn't receive much or any of the compensation on signing of a contract. They also state on page 30 that their average contract length is 3.6 years as shown earlier, and so let me break it down like this. If they have $5.2 billion in IDIQ awards divided by the 3.6 years it takes to get them, that's an average of $1.444 billion in revenue per year for the next 3 years. Their guidance is a 30% compounded annual growth rate, putting their revenue for 2021 at $1.417 billion. This looks to me like it's already hit these numbers, but if there's $2.8 billion in total remaining deal value divided by the 3.6 years, that gives us $778 million per year. That is not going to be what we see. So where do we get the new contracts to fit in? Based on their quarter 4 2020, they state they have $2.8 billion of total remaining deal value as of December 31st, 2020, up 24% year over year and 31% year over year on a constant duration basis. This is from page 44. So let's take a look at that. So here we have quarter 4 2020's business update. We can see here on page 44 that their total remaining deal value is $2.8 billion of total deal value as of December 31st, 2020. If their deal value is $2.8 billion in 2020, And then we had a bunch of new contracts signed in 2021 for quarter one. Why is that number still 2.8 billion? You can also see some extra fun information that they have the 597.4 million of remaining performance obligations and other additional info. Very, very useful link in the description below. Next, they state on page 46, in addition, we generated 42 million in 2020 revenue from new customers acquired in 2020, up from 12 million in 2019 revenue generated by customers acquired in 2019. Based on these few things, I think new Palantir contracts will have had little effect on the handful of earnings reports, even with some of the deals having known values and times. They also planned on revenue of 45% and got 49%, meaning there is some unknown for them, but I think on the whole, they already know what the revenue is, and brings me to my bearish stance, the cost of revenue. We will not see a massive earnings beat because Palantir already has a strong idea what they will report next earnings. Like they can predict the future using data or something. Wow. This means we will hit close to their estimates of 360 million. I'd venture somewhere between 360 and 380 million as a fair margin of safety for Palantir's own statements. But the biggest bear statement is next. If they are bringing in all these new customers, seeing revenues around what they are stating, and hiring all these people, we could see a fairly large expense increase in this quarter and or for a while. So hear me out. Yes, revenue is what I am looking for most from them. Yes, they have enough cash to last a handful of years, but their rate of expense will continue to increase, potentially lowering the number of years they can be unprofitable. Costs will have increased due to the 2.5x increased commercial interest that they stated in quarter one 2021. They also have costs that will have increased to deploy forward engineers to their 9 new clients this quarter, as well as continue to work on the 11 from quarter one. We may even have more expenses with quarter four contracts from last year because their acquire stage is that long. Final thoughts. I, for one, see none of this as a hindrance to the company long term, but anyone trying to play it quarter by quarter may not see the institutional increase they want and or the stock price increase due to any number of factors, up to and including cost of revenue. I am posting this only a day before earnings, so you can all laugh at my pessimism and stupidity tomorrow morning and thereafter. Best of luck, shareholders.